Okay, everybody, this is Jose Blasco here. We're about to start in like 15 seconds, something like that is when our session officially starts. But before we start, I need to have a quick sound check. So if that's okay on your side, please go ahead and give me a quick yes, just for me to know that technology is on our side. You hear my voice, and therefore we are ready to get started. Okay. Good. So it seems that it's all good. Very good. So let's get started. It seems that it's all okay. Let me get the content. guys, okay, everybody, I am back. So hopefully you hear my sound. You probably don't see my screen yet because I haven't started sharing, but I am about to do it now. So you are about to see my screen, and I am pretty positive that everything should be okay in just a couple of seconds for everybody. So please, please, please confirm on the comments box that it's all good. If you type all good, I will understand all good means you have the sound and you have the image. Please go ahead and give me an all good message on the comments box, and therefore we will begin the session immediately. Okay. Yeah, perfect. Good. Very good. Fantastic. Good. So again, let me go ahead and Orlando, I see that you are not seeing my screen. It's looking totally normal for me at this moment in time. So again, could you please, guys, maybe we can do it one step at a time, just to be clear. Please just type in here sound okay and type also video okay. So therefore, I am fully clear on what's happening. Okay, all good, right? Yes. Okay, wonderful. Thank you, guys. So again, so let's begin our session. A little bit of a bump here in the beginning part, but it's okay. Again, I'm not sure if you guys got to make a note of the email address. So I'm just going to have it on the main screen one more time. Just shoot an email to londonufos@hotmail.com. This is just an opportunity for you guys to get together in London City and talk about things you love, which is trading and the alien. Okay. Anyway, so let's begin our session, guys. So what do we have here on the screen? Okay, we have the S&P 500 futures chart. You have seen this setup before. This is nothing new at this point. For a few weeks now, I have been focusing on this setup. You probably remember, if I get a little just more precise, that in the bottom part of my screen, I have multiple how do you call it? Workspaces in RedStation. Here we go. Now I got the name. The one I'm using now is UFO EMA Lab. Next to it, we also have the UFO FIB Lab, okay, which is a lab that I haven't used for a while now. And the reason why is because as I was reading your emails in the initial weeks when we started going from EMS to FIBs and FIBs to EMS, so it seems that to some of you that was helpful, but to some of you that was confusing. So for the past weeks, I have been concentrating almost exclusively on combining those moving averages with the UFOs, and I've been working mostly on the EMA workspace, okay? We will come back to the FIBs. We will even put more things together. Okay, we will look at many things as we keep progressing in these sessions all together. But again, simplicity is also something that it's not only useful, but powerful, beyond useful. And therefore, I would like to find a good balance. And given the fact that we are a diverse group, okay, some of you are coming from learning how to trade from different schools of thought. Some of you are more active, less active, more experienced, less experienced. So I'm just trying to adapt to everybody, and therefore bear with me if sometimes I go a little too fast, or bear with me if sometimes I go a little too slow, okay? My intention is to provide tools for everybody, okay? So we should be fine in the end. Now, coming back to here, I was saying that we have the S&P. Let me show you my notes very quick as a quick introduction, and we jump into the trades. We have been looking at the three combinations of time frames on the top of this page: 15 and 2, 60 and 5, 240 and 15. Those three combinations of time frames, okay, is what we have been doing when doing short-term trading. Okay, and I see your comment, Orlando. Show on stream. Let me go ahead and show it on the stream. Orlando says it would be nice to have those workspaces. Okay, so you'll have them. All of you will have them, because we are actually building new sections on our website and doing stuff to provide a better support. Okay, and therefore, you will see how many tools will happen to be available very soon in time. Okay, just give us a little bit of time to structure and organize everything. Okay, but you will have those files, no worries. In any case, so 15 minutes and 2 minutes, it's ideal for futures. Remember, we said not for spot Forex because the non-centralized nature of spot Forex, where futures is centralized, which you trade in an exchange, in this case the CME, the Chicago Mercantile Exchange, and therefore the price data, the UFOs, everything you see is very accurate and very reliable. So it's okay to drop to a very tiny time frame. Well, the other week as well, we were talking about share bars and tick charts, which is something I am going to be bringing in little by little, but for that, we need to do some sharpening sessions too, because there are multiple things I need to explain. So we will get there. So for now, again, simplicity is powerful. We're just going to start the session today with a 15-minute time frame combined with the 2. Then we'll move to the 60 and the 5, and finally the 240 and the 15. And we're going to be switching back and forth between a couple of the futures markets, which are going to be the S&P and the Nasdaq. And then we will do the same with a bunch of the currency pairs, and we will do that using spot Forex. So that way I provide tools for everybody, even though I know that in this session, some of you may trade other markets such as cross pairs or such as crude oil or gold or natural gas. I will not use those markets in this session because, again, we are getting prepared. We are getting, if you wish, we haven't done that many sessions for sharpening yet to trade all those higher volatility markets. And therefore, I want to keep it in the safe side if that's okay for now. But for sure, in parallel, while I'm planning trades on the S&P and the Nasdaq, for example, if you guys are a little more advanced or a little more experienced and you want to run some trade setups on your own by kind of following what I'm doing with other markets, you could certainly do that. Okay. So again, bottom part of this chart, we got the 15-minute time frame and an average. So what is the beauty of the average? Well, very simple. It's a short-term average, so it shows you short-term what is the momentum, what is the trend. So somehow the idea is to avoid getting you in a trade in the wrong side of the market. That's always painful. That never ends up well. So one way to make sure that you don't enter too soon, too late, and you have some sort of a reading that identifies what the trend direction is or could be. So one way to do that would be to look at those moving averages. But again, those moving averages are important because of what I just said. They are also important because computers trade them, so they may represent new on-field orders kicking in the market, but you cannot rely on a guess or on a possibility for a trade. You need to rely on a piece of evidence. And what's the piece of evidence? Well, the piece of evidence is the UFO above. So if you have a UFO, which is a piece of evidence that tells you there are on-field orders, and on top of the UFO, you have an average that is lining up with the UFO, well, now we got something that is useful because you have on-field orders in the market already, together with potential for new on-field orders to kick in. And now we have something that produces an edge for you. So now we are, I was going to say 1 minute from the close. Actually, the new candle just started forming here on the bottom part of the chart. So let me take a look at the closing price of the prior candle. The prior candle closed at 2786.25, where the average is 2786.13. So the prior close happens to be above the average. You should be planning to go long based on what the average suggests. But the problem is that you don't have any green UFO lining up with the current price. What you have is a red UFO. So the red UFO would be a suggestion to short. But given the indication with the average, you are supposed to be long, that would be assumed to be the right side of the market. So with the S&P, we don't have a trade. So quickly, I'm going to move to the Nasdaq NQH19 to see what's happening. And in the Nasdaq, notice that the setup is somehow different, because in the Nasdaq, we did have a close below the average. So it's looking like the Nasdaq is getting ready to start falling down. The Nasdaq got a moving average located at 71.7852, which this UFO here begins 71.8075. So it's like 1.2 points above this price. Okay, so it's not ideal. You will want to see the UFO lining up with the average. Okay, so it's just for a little bit. If those UFOs were just a little lower in price, we would have a trade, because you would have the condition I just explained, which is you have the close below the average, so it's a downtrend. You want to short, and you want to short at a price where you have an average. Okay, well, unfortunately, the average is 71.68. 71.78.5 is more or less here, which is the current price, okay, where the UFO is much higher. Okay, so you will be shorting above the average, which may be shorting when a new trend to the upside is forming, and therefore not advisable. Okay, so we don't have a trade with the Nasdaq and the S&P in those time frames. And what do we do when we have that? Very simple. Very simple. You just wait 15 minutes until the next candle closes, okay, in this bottom part of the chart of my screen that we have the 15-minute time frame chart. And when the next candle closes, two things may happen. It may have closed above the average or below. If it closes above, now you're in an uptrend, so you will look for green UFOs lining up with the average. If it closes below, you're in a downtrend, and if it's in a downtrend, you will be looking for red UFOs lining up with the average. And two things may happen. You have the UFOs lining up, or you don't have the UFOs lining up. If you don't have the UFOs lining up, you wait another 15 minutes. If you do, you plan the trade and you take the trade. It's that simple. It's really not complicated at all, but you are stacking a decent amount of odds in your favor. By the way, I would like to ask you, I would like to ask everybody here with us today. Yeah, I'm using H, not M yet, Orlando. M would be after Thursday. Okay, no, not yet. It will not be wrong to use M. Liquidity is already transferring into the next contract expiration date, so it will not be that big as a problem. But we are still not there yet. Okay, remember the expiration dates. The way futures roll over, especially if we talk about the equity index markets, which have expiration dates 3 months apart, okay, which is March, June, September, and December. You always look at 1, 2, 3. You know what? You got a very good point here. I just made a terrible mistake. Yes, the rollover was happening on the 6th. Yep, good one. Good one there. So we should be using the M. Sorry for that, guys. That's the danger. In my own trading, I normally have my radar screen with the symbols already, and here, because I have the continuous symbol with nothing else, and I was typing manually the symbols in the middle, I almost made a little mistake there. Okay. Again, the difference at this time, it's not too big as a difference, because we are talking about very, very liquid equity index markets. So the difference is not too big. You can see that same story. Now price is getting to the UFO. We are above the average. So the difference is not too big. So it's not that big as a problem. Now, if you had done this with another product, which is less liquid, for example, corn or things like that, then the difference in prices could be really massive. Okay, so let's go for the S&P. Let's see what we have with the S&P. Same story. The close was above. As I said, the differences are not massive, but good point, Orlando. Thanks for that. Anyway, so we are going to be looking at other markets now, because the S&P is not providing what we need. But when looking at other markets, I will need to use the combinations 60 and 5, which, by the way, I could apply that combination to the S&P and the Nasdaq too. Why? Because, as I said, with spot Forex, which would be my next pick, we are not going to be able to use the 2-minute Okay, we're not going to be able to use the 2 minutes, and the reason why is because the nature of spot forex is decentralized. So different brokers have slightly different prices in their charts, and a 2-minute time frame really is a little bit too much distortion. So minimum for spot forex, the 5-minute time frame. So what I'm going to do is, before I look at spot forex, apply the 60 and the 5 to the S&P and the Nasdaq, which is what I was doing. Okay, and immediately I'm just going to switch into the spot forex markets and then go for the 4-hour 15 and just keep rotating. And as an intraday trader, the routine is like, I mean, depending on your trading style, because some of you may be intraday traders and you spend 3 hours a day in front of your computer screen and you love it. Some of you spend 8 hours a day in front of your computer screen and you love it, whereas some of you may spend half an hour in front of your computer screen and you hate it, right? So everybody has a different approach on how to trade. So depending on how often you want to look at the markets and how often you want to plan and execute trades, well, you would do this. What I'm about to explain, you would do it in a different frequency. But basically, long story short, if you wanted to take all the trades available in the market, which is not advisable, you would look at the markets every 15 minutes and be ready to take a trade every 15 minutes using this combination of trades. And then every 1 hour, you would be looking at the 60 and the 5 and ready to take a trade every 1 hour. And every 4 hours, look at this other combination with 4 hour and 15 minutes and be ready to take a trade. So again, now you understand what I meant with how active you want to be. So let's move to the 5 with the S&P on the top. Let's move to the 60 in the bottom part of, I just got the wrong number typed. 60 is what I wanted to type. And in this case, what do we have? Well, in the 60-minute time frame, we have a close above the average, right? So we are in an uptrend, and therefore we should be looking for green UFOs lining up with the average, which is 27.92. And you can see how the average really is producing an effect. And you know, we're having a bounce out of this price level, but unfortunately, we don't have a green UFO to rely on, and therefore have a greater level of odds in our favor. So what do? No need to waste time on the chart. Let's go immediately and move to the Nasdaq. You know, this, when you get used to this methodology, really, it's you spend extremely little amount of time to execute the trades. There is very little to think. So what do we have on the Nasdaq? Well, 1 hour ago, the candle closed at 72.14, which is above the average at 72.08. So 1 hour ago, the Nasdaq showed in this time frame momentum to the upside. So the right side for you to be in this trade is long. And we have an average located at 72.08, and at 72.08, at this moment in time, we do not have any green UFO. Okay, so no trade to be taken yet. Okay, so during this 1 hour, okay, during this 1 hour, given the fact that we are so close to the average, you know, you could certainly, even though earlier I said every 1 hour, now I'm going to change every 1 hour to every 15 minutes. Okay, every 15 minutes, you could go back to check the 5-minute time frame. And you may say, wait a minute, why every 15 minutes? Well, because how often does it take to produce a UFO? Well, you need a minimum of 3 candles to produce a UFO. You need something before, something during, and something after. And that the minimum amount of thing before, during, and after is 1 candle. So 3 candles is what would it take. So when you look at the time frames, you will need to review every 6 minutes. If you are looking at the 2-minute time frame, because 2 times 3 is 6, you will need to review every 15 minutes. If you look this combination, 60 and 5, because 3 times 5 equals 15, and you would need to review your trades every review, okay, every 45 minutes, okay, if you were to do the combination 4 hour 15. So review means to check if a new UFO has formed, right? Where, you know, revalidate the trade environment, the direction of the market, that would be done every 15 minutes if you do the first setup, every 1 hour if you do the second setup, every 4 hours if you do the third setup. And you would just keep rotating this thing, right? So let's keep going then. We don't have a trade on the Nasdaq and the S&P. So let's move now to key currencies like the Euro spot Forex. Yeah, and I'm seeing your message there, Orlando. I'll take a look at that later. Okay, Orlando is just sharing with me that he sent an email with questions, so I'll take a look at that. Okay, so what do we have here? Well, the prior close was above the average, as you can see. So we are in an uptrend on the euro, and we happen to have a moving average around 112.68, and we happen to have a green UFO around 112.70 to 112.61. My friends, this is exactly what we're looking for. We just find one. Okay, and you'll find this many times a day. We just found one. We have our green UFO lining up with an average in the context of an uptrend. Okay, so this type of thing where price is above, comes back to the average, very close to the average, and then bounces, and many people will be looking at the average like it's magic. And let's face it, computers trade it, so it helps. But the real magic is when you have the UFO, okay, and the average. So now you have on-field orders in the market now and potential for more on-field orders to kick in then. Okay, so let's plan a trade. Okay, let's plan a trade. We're gonna plan on a long trade with the euro, where somewhere above we will have a final target. Somewhere in the middle, we will set something that we'll call a safety target. I'll talk about that later. The UFO will be our long entry. So this is an entry for us to go long. And if it goes below the UFO, that also means below the moving average too, and most importantly, below the UFO. So then we'll have to act on a protective stop, okay, to close the trade for a loss, obviously, but that loss will be very limited in size thanks to using risk management techniques, in this case, a simple stop. So let's begin with the upper part of the trade. Let's begin with the final stop. Okay, let me change the color so you can see that better too. So let's begin with the final part of the trade. Let's begin with the stop. So if I zoom out a little bit, well, I think that we can see that there is a red UFO right there at 112.93. Okay, so it seems that it would not be a crazy thing to plan on 112.93 to be our final target. Okay, 112.93. Okay, so 112.93. Let me move this down a little bit so we have a little more perspective. So 112.93 would be somewhere in there. Then somewhere in here we'll have a final target, and then we got our long entry, which is going to be around 112. I believe it was 70. Let me go ahead and click and hold the green box one more time. Okay, and by the way, I see a few questions from Devan, London Trader. I'm coming to take a look at your questions in just a second. So 112.70 is the beginning price of the box, right? And the ending price of the box is 112.61. So 112.61 is the ending price of the box. 112.70 is the beginning part of the box. So initially you would say, okay, that's going to be my entry, my stop, but we need to be careful because remember, this is spot Forex. And remember, every market that we trade got two prices, the bid and the ask. The bid price is the price where you buy, and the ask price is the price where you sell. But that's when you use a limit order, right? And you are willing to be patient to get filled at the price you want. Where when we are buying to get long, normally instead of having the seller come join us, what we like to do is to join the sellers. Okay, in other words, you buy from the ask, you sell to the bid. And in Forex trading, I said that in prior sessions, the charts that we get access to give you information about the bid, not the ask. So for me to get information about the ask, I need to use a different symbol, which is EURUSD.A. If I do that, now I'm going to get information about the ask, and it's going to show me the UFO in the same location, but it's going to be a UFO with a different price. Okay, so let's give it a second. It's loading. Here we go. And by the way, notice how in this time frame we are hitting already a UFO here. So that's exactly what I meant, and that's why we don't use the 2-minute time frame on spot Forex. You can see that there is a little bit of distortion. Okay, so I'm going to have to do something a little fancy here to be able to find out what is my real good entry price. I'm going to have to zoom in. Okay, and try to identify better where this box corresponds to, and notice that this box is lining up with this pivot high. that is happening on 312 at 825. So what I'm going to do is go back to EURUSD.A and look at the 825 candle, which is that one. Okay, this is the 825 candle. Okay, and what I need from that candle is the value for the high. So 825 candle, I'm going to put my mouse in here, and it says the high is 112.75. Okay, 112.75 is the high. So Euro USD, now I know that even though my initial intention, here we go, that's much better. Even though my initial intention was to buy at 112.70, well, if I want to not to miss the trade, I'm gonna have to go for 75, because I'm gonna have to buy from the ask, and the ask price of that candle is 75. Okay, now when you chart Forex, guys, you have seen the distortion, and now you understand. It's a great example for you to understand well why when we do spot Forex, we don't use the 2-minute time frame. Even in the 5, sometimes we have price distortion. But in any case, you have seen me that I'm relying much more on what I see on the bid than the ask, because you may say, wait a minute, Jose, on the ask it shows that you are in a UFO already. Why don't you take the trade now, right? And again, the majority of traders around the world, and those computers that apply algos and artificial intelligence and computer trading to the spot Forex markets, they do it using the bid price of the chart, because it's the standard price. I mean, other platforms actually don't even give you access to the ask price of the currencies on the chart. Okay, most platforms, they will give you the euro, the pound. That's it. Okay, TradeStation is so cool in the sense that you can look at a lot of things, including the ask price. Okay, but anyway, so now you know. So we are planning to enter the trade at 75 with a stop at 61. So if I bring a calculator here, okay, 75 minus 61, we are talking about 14 pips of risk. Now, you may be thinking like me, I bet some of you do, and you're looking at how much you're going to make, and you're going to take profits at 93, and you are entering at 75, so you're going to make 18, and for you to make 18, you are risking 14, so this trade is barely a 1-to-1, 1.28 to 1. Right, so this trade is not a very high quality trade. So how are we going to deal with that? Well, we're going to do something here to make the trade a little better, and there is a price to pay to what I'm about to do, which is you may miss the trade, but I'd rather miss the trade than get into a trade which is 1-to-1. I mean, if this was options and I was doing something non-directional, I would be okay. But being this a directional trade for short term, I would like to have a little bit of a more decent reward to risk ratio. And again, you can see that 79.94% of those UFOs are working well with the euro. So if you go for 1-to-1, it's not like it's a bad idea, okay? But at the same time, I'm talking about trading psychology. Think about the psychology of a trader. If you were to take 5 trades in a row and you were to lose 5 times in a row, knowing that if you profit 5 times in a row, because your trades are 1-to-1, the only thing you did is to break even. In other words, you took 10 trades, your mindset was greatly challenged, then you got 5 winners in a row where you may feel like Superman, but the reality is that the only thing that happened is that you went back to break even. What a waste of time. Is that making sense? So you want to have a little bit greater relationship between the risk and the reward. So if you were to get a collection of losses in a row, then just a few winners would offset the problem, instead of you have to work so hard just to break even. Okay, so that's why I'm going to tweak the trade a little bit. And again, the price to pay to the tweaking is that I may miss the trade, but I'm willing to do that. Okay, because again, risk management is important. We need to find a balance. Okay, so again, so what is the moving average here? It's 112.68. Okay, 112.68. Now, remember, my entry here is 75. Okay, which makes sense because that's where the UFO is. But at the same time, computers are not likely to start kicking it strongly until they get to 68. And by the way, when this market goes down a little bit, that moving average will go down a little bit. Maybe the moving average will become 67, something like that. Okay. So what I'm going to do is, instead of relying on the top of the box, what I'm going to do is I would like to rely on the inner circle in that case. The inner circle shows where the greatest concentration of orders are. This is happening at 66. If you do the math of what we had before, where the top line of the green box was 70, but we ended up concluding it should be 75 because of the ask chart, from 70 to 75, we are talking about 5 pip difference. It's a lot, to be honest. Normally it's not that much, but that's what we have. So I'm going to respect it. So what would I want to do? I would want to add 5 to 66. And therefore, I'm going to set my entry to be 71 instead of 75. Now, if I do 71, well, obviously, I am entering lower in the circle. So what's the problem? The problem is that you may miss the trade. Okay, it may touch the top part of the green and bounces, and you never got into the trade. That's the problem. But what's the good news? Well, 71 is still above 68, which is the moving average. So again, you're still buying a little in front of those potential computers, and with those unfilled orders, the round circle within the flying saucer, and therefore, even though the risk is to miss the trade, definitely this trade could certainly make sense. Now, if you were to take this trade, what is your relationship now when risk and reward? Well, you're risking 10 pips, 71 to 61. And now for you to risk 10 pips, you are now shooting to make a profit of 93 to 71. That's 22, and you're risking 10 to make 22. So that's a 2 to 1. Okay, so 2 to 1, I would take it. I would take it. If you read basic books on trading, classical, if you wish, agreement in the whole industry of trading is that 3 to 1 is ideal, and I agree. 3 to 1 is better. But at the same time, if you have a trade where it seems that 70% of the times, 69.94% of the times, those trades are likely to work, I guess that you would agree with me that this trade is certainly adequate. Okay, and now again, let's say some of you have a trading plan where you happen to be a trader who is more conservative, and you decide, you know what, I'm not going to take this trade. I need my 5 to 1s. It's fine. Okay, but for others, if you are like me, or your personality is just a little more open to accept a little less reward for that amount of risk, this trade, I would certainly say, is not a crazy trade. It's a valid trade. Okay, so now it would be time then to calculate what our safety target would be, because now we know our risk is going to be 10. And because we are buying at 71 and 10 would push the safety target to be 81. So then, to be visual, I'm going to do this. Okay, and basically we are saying that our safety target would be located at 112.81, given the fact that our entry is located at 112.71. So in other words, if the market comes here and bounces, okay, the moment you get to your safety target, okay, what you're going to do is scale out 50% of your position. Scale out 50% of position. What does that mean? It means that if you bought 2 lots, you sell 1 lot. If you bought 6 mini lots, you sell 3 mini lots. Is whatever position you got in, get rid of half. Why? Because if you get rid of half of the position at 1-to-1, you are now in a risk-free trade. You cannot lose anymore, no matter what happens, even if you get stopped out. And hopefully, this market now is moving your way. And if new green UFO starts forming along the way, you could even consider, this is very advanced, but we'll do it. You could even consider now move your final target. Because what happens in an uptrend? In an uptrend, typically, new buy orders are added to the market, where sell unfilled orders are canceled and taken out of the market. So in other words, those red UFOs are less likely to work, and those green UFOs are more likely to work. So what could you do? Go for the next UFO for your final target and keep moving, right? And keep trailing your stop below new green UFOs that may form. And this is how from time to time you will collect incredible profits. Okay, so just a few ideas there for you to consider. Time for you to take a screenshot. Time for you certainly to place the order in the system if you wish. I'm not going to do it in my case just because TradeStation doesn't offer Forex execution. So I'm not going to do it. But another thing that we'll bring into the equation sometime soon in the future as well is a collection of different brokers and different charting softwares as well, not only TradeStation. We'll bring more stuff where, that way, I'll be providing more tools for other people that may or may not use TradeStation, that may or may not live in the States, that may or may not live in Canada, for example, where TradeStation doesn't work. So, all of you will have many more solutions. Okay, for now, again, I'm going from simpler to more advanced, and I'm sticking to TradeStation. Let's call it a few more weeks, okay? So now, while you guys are placing this order, while you guys are taking a screenshot, I want to take care of some of the questions. Okay, so I got Devan. How are you, Devan? It's great to see that you join us today. So Devan said, how much weighting you give for the moving average? Well, really, the weighting is given to the UFOs. Okay, the UFOs is the tool that will make a difference. Okay, not the moving average, but the moving average does produce a very convenient scenario, which is number one, that you don't need to think. Okay, I'm sure that all of you, unless you never traded before, which I believe that very few of you would fall into that category. Okay. I believe that all of you have been in a situation where you've been in a trade, you lost, and then you looked at the trade and you started wondering, why did I take this trade, right? I mean, how come after the fact we human beings can conclude things that are just common sense, where in the heat of the moment, sometimes we take decisions where they are totally justified to us in that moment, but then we look at it and it's like, that was not a good move. That was not intelligent. Why did they do that, right? Why is that? Well, it's called human emotions. So what's the beauty of the average? No human emotion. If it's above, it's above. If it's below, it's below, right? So you remove the thinking, okay? That's why it's convenient. So it's not like I'm going to give it a lot of weighting, but I'm going to respect it. I'm going to respect it because that way I stop myself from thinking, because no matter how experienced we are still human. Okay, and we get impacted by the things that happen around us, by the prior trades you have taken, but how much money you need to make this month, how far are you from your goals. We get, we get impacted by all of this. And what's the beauty of the average? No thinking. So that's the weighting I would give it. Okay, but then conveniently enough, those averages are also traded by computers. So now what I'm going to talk about is only a possibility. Okay, it's only a possibility. It's not a certainty or a high probability situation, but it's only a possibility. But that possibility, together with the UFOs, which is a piece of evidence, well, now you have something solid. Because what is the possibility? What is the possibility that those moving averages produce? Well, the possibility is that you may have new on-field orders entering the market after you enter the market, on-field orders that were not in the market yet, but are now entered by computers that trade based on the moving averages. So if instead of a nice pile of order to trade and lean against that your beautiful TradeStation platform has identified and plotted beautifully as a little flying saucer here on the chart, if instead of only relying on that, you were to know that that pile of order may grow because some computer may add orders on top of the orders that are already in the market, well, I guess now you have a smile on your face because you would appreciate that, I'm pretty sure, right? And that's the weighting we give to the average. The fact that possibly they add a little probability in our favor. Okay, it's not like a major thing, but possibly. And if that happens, it's helpful. And second, it's a mechanical way to decide, should I be long, should I be short? Right? How many times you have been looking at a market and like, oh my God, I like this price point. I would like to short at this price point. I like this price point. I would like to go long at this price point. But what do? Do I go long or short? Because I like both price points, but what should I do? Go long first and then short, go short first and then long. So what's the beauty here? No thinking. That's it. Okay? That's going to help you. Okay, we have received multiple emails, guys, since we started doing get-together sessions. And I don't mean to brag about anything. Please do not get me wrong. Okay, this may sound a little arrogant. This is not at all where I'm coming from. But we have received multiple emails since we started doing sessions together. And some of you guys have said that the simplicity of doing what I just explained is helping. You are producing better results than before. Is that making sense? So again, I'm sure you have heard it a million times in the past. I mean, every trading book talks about it. Trading should be done in a simple manner, but the reality is that most people overcomplicate, overthink, add emotions in the equation, etc., etc. Okay, so long explanation for a simple answer, for a simple question, Devan, but your question really was very important, very important. Okay, so I thought of adding a little extra there as an answer. Okay, Devan, one more question here from Devan. For me, I just have ATS 107XN, and I just check the matrix, which one aligns, and take that. Yes, that's the best way to do it. So you have the right symbol on your screen, and you also have the matrix with a specific symbol, the symbol that represents that specific expiration date, right? And if the prices are the same, you know you're using the right expiration date contract. If the prices are different, then you know it's not the case. Okay, so that's a very valid way to do it as well. And you would have avoided doing that, the mistake I made at the beginning of the session. Okay, so good one. Orlando, I have to go out. Okay, no worries. A pleasure, Orlando. A pleasure, my friend. London trader, are we happy with the stats figure, which is if it's 39%? I don't remember when we got that figure, 39%. But if you were to have 39%, you should not be happy. You should not be happy. You should not trade that market, at least in that time frame. Devan, to plot the moving average below, it's very simple. This is, as you can see here, the moving average below, it's moving average exponential, right? So it's just a basic indicator interest station. So you just right click, you go for insert analysis technique, and then you find the tab indicators on the left, and then you go for moving average exponential. Okay, and you don't even need to customize anything. If you have this check mark as prompt for format, okay, if you have a check mark, when you click OK, it will give you access to the inputs window where you can change parameters. Really, the only thing I've done to this moving average, I didn't change the length, which is 9. The only thing I've done is to change the color. Instead of red, I made it purple. That's the only thing I've done. So I just took a basic moving average that comes as a default in the platform. Okay, that's it. Look at how simple that is. Yes, AK Gaming. So you have a very good point, my friend. I hear you. It's difficult to sometimes fight one's personality, and my personality is to speak fast. Okay, so I will keep that in mind, but you may need to remind me a few more times, okay, if you don't mind, because especially when we are doing trading sessions where we have 1 hour to be together, there is so much I want to share. So it's coming from my heart, but I could understand that having an accent and speaking fast may not be the best combination. So I will try to slow down a little bit, but I'm glad you said, but at the same time you may have to remind me if you don't mind. Okay, good. London Trader, we have another question here from London Trader. This sounds great on how to build a mechanical rule around trading this way. Yeah, thanks for that. Oh, Devan, I understand. So you want to plot the below average on the top chart, okay? It's funny that you asked, because the other day London Trader was asking me, and it's funny because you two just ask questions one next to each other. So it's kind of like you have the same thinking, the same mindset. So very quickly the other day I told London Trader that it's very easy to be done, and then I tried to do it and I was not able to do it, because when the moving averages are exponential, they don't plot easily into another chart. Okay, if it was a simple moving average, it could, but with an exponential, it's just a way on how TradeStation plots it and calculate it. It's a little problem. Okay, so what I said last time, so let me repeat myself. And please just give me a little time to do that, okay? But what I said last time is that I was going to build an indicator for you guys that does that, okay? And I will put it in the App Store of TradeStation, but that will be a free app. Okay, that one will not have a subscription fee or anything like that. It will be a free app, and I'll make it very cool where the moving average actually not only calculates what the average now, but also calculates what the average would be if you get to where the UFO is. Okay, so that way, it's going to be, it's going to be a very visual. Not only you know where the average is now, but of course, if the price goes down to hit the green UFO, you would also want to know where the average would be at that time. Okay, so I'll design a tool like that that's going to be very useful for this group, and I'll make it available for everybody. But please give me a little bit of time so I can do a proper development and test it and all of this. And then TradeStation takes some time as well to upload it in the App Store. So just bear with me. For now, let's do things manually, because at the same time, sometimes it helps for a short period of time to do a couple of things manually, and then technology needs to take place. Okay. Okay. So question here. So London trader. So good, guys. I love your questions because it clearly shows that you guys are putting thought and time into this, and makes me very happy, guys. So London trader says, is there a mechanical rule we can apply to let trades run, hoping that on-field orders in front of us will get canceled and the trade can keep going? Yes, the answer is yes. And again, initially you have to respect what you have in front of you. So you cannot plan a trade unless you have information in front of you, and whatever information you have on you needs to be respected. Okay, so let me do this. Let me try to get a whole chart here and squeeze a lot of things here to see if I can come up with a proper explanation to answer your question, which is very, very good. Okay, because many times in trading, more than having a good entry, really the key for success many times, I would say more often than not, is having good exits. Okay, good exits is often more important than good entries. So now let's say that particular market came to the green UFO, and then in a straight line it goes all the way to the red UFO. If that was the case, what should you do? Get out. That's it. Why? Because when the market goes up so fast, okay, think about it. This thing is becoming expensive so quickly. In other words, whoever is buying when this thing became more expensive, and whoever is buying at this price at this time, after the move already happened and is becoming very expensive, and on top of that is hitting 112.93, which is a place where you got on-field orders to sell, whoever is buying there, that's a person who probably is not very well versed in trading the markets. Is that making sense? Is probably an amateur, is probably a casual trader, someone who does not make trading as a profession. Is that making sense? So what's likely to happen at that time if price goes too fast like that? Well, what's likely to happen is that UFO is going to work very well and the market's going to fall down. Okay. So what would you want to do? Take the profits there, get out, end of the story, finished. Okay. Now, a different story is that what happens is that the market comes to you, okay? You get in the trade, and as you get in the trade, now the market goes up, okay? And then a new UFO forms, and then the market keeps going up. Well, if a UFO forms here and the market keeps going higher, what is that UFO telling you? Well, that UFO is telling you that new institutions stepped in with a brand new pile of buy on-field orders. So this is telling you that the trend that the moving average was representing, that was happening already, that UFO is telling you the trend is likely to last for longer. Why? Because the institutions are adding buy on-field orders in the context. So guess what? If institutions are adding buy on-field orders, probably it also means that they are removing sell on-field orders. And therefore, you could start not looking at that red UFO as something relevant, and therefore do two things. Set your new target to be the next UFO, okay, and set your initial stop that was located below this UFO. Set your initial stop to be below the new UFO that just formed. And now two things may happen, okay? Two things may happen. Maybe a new UFO forms, and it keeps going, right? And if that's the case, you would take your stop and you would just move the stop to the next green UFO, right? And then two things may happen. It may go down, it may go up. If it goes down, you will be okay, because you know the moment it's going to come to the UFO, it's likely to bounce out of the UFO because you are in an uptrend given to you by the average, and you have the UFO to defend yourself. So you know you will be happy with this trade. And from there, two things may happen. Okay, a new UFO form. Let me do that again. A new UFO forms. Okay, and it keeps going. And if that's the case, you would do the same story. You would cancel. Okay, you would cancel this target, okay, and you would go find the next UFO and set the next target to wherever the next UFO was. Okay, so let's say you have a red UFO here, so you would set your target right there, right? And again, you keep doing it until you either reach that very far away target, or price went up, then went down to the UFO, but penetrated the UFO enough before turning. Okay, penetrated the UFO enough before turning, where that UFO disappeared on your screen. In other words, you don't have the green UFO anymore. So yes, you have the uptrend, but you don't have the unfilled orders. And if this was to fall, it was going to be likely all the way to reach the next UFO here, and that would make no sense. So the moment you would see that UFO disappear, you know, somewhere in this region of price, you would just get out manually, and you would call it the day for that particular trade. And by doing this type of management, which again, if you do it in the 5-minute time frame, for sure you have to be in front of the screen. But if you do it with a 4-hour time frame, etc., you don't have to be in front of the screen to do that. This is how sometimes you will end up with trades that are 10-to-1, 20-to-1, things like that. Okay, you could certainly do that. It will not happen that often. What will happen more often is that you reach nearer targets, but sometimes you will have those very, very beautiful trades. Okay, and I mean, you guys think about it. What I just explained here, isn't it a little bit like what we could see here? Isn't it kind of the same story, right? Kind of. So you know this, it went up and down, up and down, up and down, up and down. Every up and down, it's price coming to the UFO, right? And reacting to the UFO and bouncing from the UFO and keep going. So if every time you kept moving your stop, you would have gone pretty far. Okay, so very good question, London trader. Long answer, but very, very good question, and therefore I guess it deserved the long answer. Anyway, so let's go back to the tiny time frames. I would like to do one more round of looking at the equity index markets. So what do we have? We have 15-minute time frame below, 2-minute time frame above. So ESM 119. And please, London trader, let me tell you, let me know in the comments box if I did answer your question. Okay. So so what do we have here? Well, we're in an uptrend. Okay, the average is 72.92. No UFOs around 72.92. So nothing to do with the S&P. What about the Nasdaq? Okay, with the Nasdaq, similar situation. So let's move to the 5-minute time frame and the 60. So 60 is below, 5-minute is above. So what do we have? Well, we are above the moving average. We're in an uptrend. Actually, 1 minute from now, it will change. So the close is 72.10. The average is 72.09. So it's looking like we're gonna close in 1 minute, right? So in 1 minute, we're likely to be still above the average, okay? And the average has the average is gonna be 72, like 09 more or less. Okay, so it's 10. 72 to 10 is a new average after the new close. Okay, so 70 to 10. It's basically in the middle of nowhere. We have no green UFO there. So let's look at ESM 19. Okay, and we have a similar situation. We are above the moving average, but 27.93, we don't have anything. So with those two time frames, we got no anything. So let's move to the 15-minute time frame and the 4-hour time frame. Okay, and we are in an uptrend here, 27.85, and well, now we do have a trade here. No, well, actually we don't. 27.87, 27.85.5 is the green UFO, and the reason why I said we don't, I mean, technically we do, okay, technically we do, but we don't because of this, because 27.85.88 is now. If the S&P drops down, then the average will move down a bit. And if it moves down a bit, it's going to be below 27.85, and below 27.85, it's white space. So almost, but we don't. What about the Nasdaq? NQM19. So with the Nasdaq, we have an average at 71.80, and I have to say that with the Nasdaq, we do have a setup. We do have a setup with the Nasdaq. Yes, we do. Okay, so here's the setup. We have this green UFO between 85 and 74. The average is 80. If I do the same thing I did before, if I freeze the chart and I draw a little line representing the Nasdaq coming down to the bottom UFO, then what's going to happen to the average is that it's going to go down by a little bit, and therefore instead of 71.80, it may be 71.78, something like that, but this is still above 74. Okay, this is still above 74. So what do we have? Well, we have two green UFOs overlapping each other. Okay, and therefore that is a valid trade setup for you to plan on a long trade using the 15-minute time frame on the Nasdaq. Okay, now how far can we go? Well, we have a red UFO there. Good news, the red UFO is light color. So because if I plan this trade, I'm going to do the same thing I always do, which is I'm going to set a final target. I'm going to set a safety target. Then I'm going to have an entry. And I'm going to have a protective stop. Okay. Because we're going to do that, okay, I'm pretty positive that when you look at the safety target, okay, when you look at the safety target, that safety target, given the distance, given the high of the green, and given the distance from the green to the red, I'm pretty positive my safety target will be happening prior to the red UFO. And therefore, I will be glad to take this trade and shoot for a final target above this red UFO. Okay, now, I understand now your comment, London Trader, with the percentage of performance that we see on the screen, and a very good eye. It was not concerning to me, and here's why. But London Trader say, hey, you are showing 15% performance applying the UFOs to the Nasdaq in the 15-minute time frame, and London Trader is thinking this is absolutely terrible, this is pathetic, this is awful, right? Well, here's why this is happening. Because this contract, okay, the M contract, is trading liquidly since last Thursday. Okay, if instead of looking at the M contract, I was to use the at NQ, which is the continuous contracts that put together all the expiration dates only when they are liquid, which the M contract is liquid now, but was not liquid 1 week and beyond 1 week ago. So if you were to look at the at, I mean, I am pretty positive. I would go as far as saying, I bet you, that the performance, whenever it loads, come on, load for us, the performance is going to be much, much better. Interesting. Okay, now here we go. So what's the performance? Well, 54 now, 60 now that it loaded. Okay, so you're gonna have the proper performance. Look, if you want to do it even better, and by the way, this is a follow-up to your question, Devan, as well. Little comment. Here is actually my favorite way on how to deal with contract symbols. It's to use the at, so it's continuous. Use the NQM19, so you make sure that that symbol is tradable. Okay, because on my matrix, if I choose to use the matrix, let me show you this. Okay, so on the matrix, if I do NQM19, okay, on the matrix, you can see I got the real-time data. Okay, that was NQM19. That's the symbol. Let me look at the download scheduler here because something got stuck, I believe. This is interesting. For whatever reason, it's not pulling the Nasdaq. Okay, now it's weird. It's like it's going back in time to reload the whole Nasdaq. Okay, so we'll give it just a second. It should be almost there. Download scheduler. Let me kill it. Okay, so now notice that my symbol here on the upper top is NQM19, but I have the at in front of it. So the at makes it continuous, meaning that prior to last Thursday, where the edge contract was traded, not the M, but the edge, well, what this chart is doing is that before one Thursday ago, it's showing you the edge, and after last Thursday, it's showing you the M. So it's the continuous, that's the continuous contract. But the beauty is that when you make it at, it's continuous, but the beauty is that instead of at NQ with nothing else, okay, if you make it at NQM19, guess what? You can also have it on the matrix at NQM19. You can also have it in the matrix, and it's tradable. You will see that is tradable. My buy and sell button are active. Where if I was to, in the matrix, I was to add NQ only, okay, it's not a tradable symbol. And notice how the buy and the sell button are grayed out, so I cannot trade. So if you want the continuous contract, so you don't get the performance stats distorted, right? But you also want to be able to link your chart with the matrix, okay? Link it. So whatever you have in the chart is the same thing that you have in the matrix, and it's tradable, blue and red button, as you can see, right? So you can use the at NQM19, and now you don't need to worry, okay? You can actually even go beyond that, and using on adjustments, if you choose to do on adjustments, you can do at NQM19 equal 107xn, for example, and now you are forcing TradeStation to use as the rollover date 7 days prior to the expiration date of the futures contract. But now I'm getting a little too advanced here, okay? And you can see there is a slight difference here, 6038 NQM19. And now we have almost there. Okay, for whatever reason, it's taking a long time to load that symbol. But anyway, you will see it, the stats are going to be very similar. To be honest, when it comes to the advantages of using moving averages and that confluence where the computers may add orders, etc., it's actually better to use the continuous contract instead of the adjusted symbols, because extremely few platforms in the world provide the capability of adjusting. So most of the computers that trade and use whatever other platforms to trade, most of the times they are either using the contract symbol, NQM19, or the continuous symbol, which is the at NQ with nothing else. Okay, add NQ with nothing else. So, you know, if you add equal 107xn, things like that, yeah, for the UFOs, it may or may not give you an edge. You will know thanks to the stats, but for the moving averages, definitely not. Okay, so it would be better to not to use adjustments. Anyway, now you understand why normally I just type NQM19 with nothing else, because in futures, and we haven't done sharpening with futures yet, in futures trading, there is a lot of things to be discussed. Just like in options trading, we're talking about calls and puts and all those things. In futures, there are many things to be discussed. Some of you are futures traders, you know all of this, but for the ones that you have not traded futures and you trade Forex, for example, you see there is a bunch of things there that you will need to learn, okay? So anyway, long story short, what I was saying is that, you know, I have room to get to my first, safety target, you know, before getting to the red UFO. And therefore, I would be open to plan a trade on this particular market where my final target would be above. Okay, now what's the problem? Above, if I scroll down, I see nothing. And the reason why I see nothing is because higher prices than 72.41 are found a long time ago. So you have two ways to fix this, which is to either go for a higher time frame or load more bars on your chart. Okay, I would recommend to use a higher time frames. So I'm going to go for 60 and see what we have there. Nothing. What about 240? And if we look at 240, here now, we can see where our final target should be, which is 73.0775. Wait a minute. I am doing this with the M. I cannot do this with the M. I need to do this with a continuous. So let me do 60 again. 60. Nothing. 240. Here we go. So 73.82, that would be a number, okay? So 73.82.75, okay? 73.82.75. Okay, so I'm gonna go back to 15-minute time frame. Where is my writing? Okay, I lost my writing. It's okay, I'll write again. So final target is gonna be 73.82.75. This is what we just concluded. Now, notice that this is really far away. It's right there. Okay, that's 73.82.75. And by the way, it's a realistic approach because, you know, that's where the UFO is. Then safety target, we need to calculate that manually. Okay, and I will plan the trade, guys, and we'll call it a day. And then we're gonna have to have a long entry somewhere here. And then we'll have a protective stop below the UFO. Okay, so again, what the entry should be. Well, I would like to propose to go with 91.5. Okay, 91.5 with a stop being below 71.74. So I'll make it 71.73.75. Okay, so if you were to do that, how much is your risk? So 91.5 minus 73.75, this is 17 points and 17.75 points. So if you add this on top of 71.91.5, this brings the safety target to be located at 72.09.25. 72.09.25, which is, I believe, I would say, I got it, which is around the bottom part of this. This is 72.22 and this is 72.09. So it's like 10 points before you get to the red UFO. You have already collected your safety target, and therefore you cannot lose in this trade anymore. Okay. So that would be the trade. Okay, this, my friends, is the trade. Time for a screenshot. This, my friends, is the trade. Time for a screenshot. And if you take the trade to know about the result of the trade, so shoot me an email and let me know how it went and your experience and all of this. Okay, but here's the trade. Okay, you have it, and now you understand the rationale. Anyway, everybody, so we're closing the session like 15 minutes after the top of the hour. Normally we do 1 hour. Today we did a little more. Good questions, guys. Good questions. Very happy to spend this 1 hour get together all together, and I will see you on Thursday. Okay, take a look at this. Take a look at this. Get together. Schedule is here. We have updated dates all the way into the end of April. So make sure you take a look. The next one is going to be March 14. That is Thursday. We'll be doing longer term. This is 1 hour, 1 day, 22 hours, 44 minutes, and 17 seconds from now. See you then, my friends. Keep up the good work. Be disciplined. Be professional, guys, and send us many emails if you have questions or anything. And yeah, have fun in the markets, guys. See you soon. Bye-bye.